today. This is Netflix for today. I did trade. I did a Apple call, but I didn't record it. About $35 in a few minutes, and good enough. Then I had to go to work again. Now I'm back home. It was a short day, but either way, I want to go over and kind of show you how I used to set up my charts before and what I'm looking at now and the reason why I changed. When I first started trading, the guy that was teaching me was talking about moving averages, and these are moving averages. The green is the exponential 8, exponential 14 purple, moving average 21 in the dotted white line. And he was teaching me to set it up like this because he's saying when lines start to cross, that's your entry and your exit points. So I'm looking at this, and it was like, I think I traded like that for about a year and a half, and I lost a huge amount of money because the entries were too late and exits were too late. So I was missing and I was staying in too long. So I was a bag holder. You can call me a bag holder. But what I'm saying is, if you look at this, you got to remember one thing, that most all indicators are lagging indicators. Lagging indicators, meaning they're telling you what happened in a previous time. They're not telling you what's here and what's coming up. It doesn't work like that. So until I figure that one out, then I started seeing holes in my game. So I had to move on to something different and retrain my thinking. Anyway, going back to this, like I said, the 8, the 21, and the 14. So if it's on an uprise, you're going to see green, 8, 14, 21 respectively. And likewise, when it's going downhill, you're going to see it going the other way. 21 on top, 14 in the middle, green on the bottom. Pretty simple. But here's the problem. Let's say you're looking at this downtrend and you're saying, okay, it's looking, well, I'm not going to chase. I'm just going to stay here. I'm going to wait till everything crosses over. Okay. You do that. That's fine. So we look here, and it looks like everything crossed about right there. Okay? Does everybody see that? All the lines crossed right there. You got 8 on top of 14 on top of 21. This is your entry if you are trading on the moving averages. The problem is the entry for this was actually right here. Do you see this? You see this? This is where you should have got in. This is where you should have got in, because you see the reversal here. This candle signifies a reversal. And then boom. Okay, you're going. Well, you're starting to get into the red water here. You got a series of red candles, and this is the 5-minute. So I'll use it to get in, and then I'm going to sit there and kind of look at it and engage it on the higher time frames. If it does look like it's time to get out, then I'll get out. If not, then I'll stay in. But these candles here, there's 5 here, and it's 5 minutes, so it's about 25 minutes of trading, and then here's 30. So that's like a 30-minute candle right here. If you consolidate and put these things together, it's a red candle. It's going down. So you want to get out. But you start seeing these downward momentum candles here, then cut your losses and go. But if you go by the moving average thing, and I think somebody even created one called the gator or something like that, because this is the gator's mouth. As it opens wide, you're in and you're safe. When it gets together, the mouth is closed and the gator's sleeping. That's what I've heard how they train people with that method, which is kind of comical. Anyway, again, we start seeing, okay, there's a crossover. 21 crosses the 8. Do you see that? 21 crosses the 8. And then the 14 crosses over. It's riding right there, so it's time to get out. Well, guess what? You got beaten up this whole time when you should have been getting out here. When you should have gotten out here You're now getting beat up and waiting for the thing to turn over till you see the cross, the actual cross of all three here. Actually, it's way over here, so you end up getting beaten up because you're getting out here. I mean, that's 487. That's like $1 loss right there. And if you're doing options and you're fighting against time again, you could be, actually losing somewhere down here in value of your option. So for me, I kept wondering, why was I was successful in getting in and out, but why were my profits so marginal? Or why was I get caught holding the bag? Or why was I getting in late? This is why, because I was using these moving averages. Again, they're lagging. They're telling you something before. They're not telling you what's coming. They're telling you what's already happened, and it's already too late. I don't want to know what happened 8 minutes ago. I don't want to know what happened 5 minutes ago or 5 candles before, because it makes no sense. It's no use to me. I need to see what's coming up. And the best way to do that was for me to get rid of these moving averages. And it took a long time for me to get comfortable, and it still is. I've got the way I trade now. We'll go here. We'll look at a chart here like this. This is TOS. Okay, Thinkorswim on TD Ameritrade. This is how I trade. Nothing. Volume's down here by default. I rarely even use that. But this is how I trade. Straight up, just looking at the candles and momentum. Because with all this here, I was getting in late and out late and even holding bags and getting beat up. So what even made it worse was here. Let's add some more stuff in there. I was playing around with the ADX. Okay? Let's go down here and stochastics, which I actually like, but I can't use them. Not with the way I'm trading now, just on candles. So I've got all this going on, and then I got some volume stuff, and I got some other momentum oscillators. Oh, let's throw some Bollies in there. Let's see what the Bollinger Bands, okay? I don't know if I can even put them on here. Let's get rid of something here so I can get the Bollies put in here. All right. There, like that. It's sitting on my ADX, okay? I can put another one on my, let's see if I can put another one on my price history. Okay, there you go. So I got this going, and I'm looking at it, and I'm just like, oh, I don't know where to get out. Well, we're maxing out here, so I'm going to have to get out. And then if I have my stochastics, it's telling me stay in. And I got, well, wait a minute. This one's saying, we're not quite there yet. And, if we look here, I'm at the top of the Bolly there, but I'm not at the top of the Bolly here. I'm not at the top of the ATX here. So, I mean, it's just, I had so much going on. I mean, everything was moving. I had no idea what was going on. It was just, they call it paralysis, overanalysis. Too much going on, so you're like paralyzed because you can't make a trade because your moving averages are telling you one thing, your ADX, your oscillators, your stochastics, your RSI, your MACD, everything's telling you something different. And it's only once in a blue moon that you're going to find everything moving in the same direction across all those lagging indicators across different time frames, because you have to look at different time frames, that it's a 1 in a million chance that all those things are going to be working together in the same direction at the same time. So less is better. You've got to get rid of this stuff. So when I started getting rid of it, I just left the 8, which is if I had to use one, I would only use the 8, because that's your trend line. It's going to show you which way the trend's going, because no matter what, no matter how high it gets, it's going to have to come down and touch. It always does. See, you have a run here of a few candles, boom, it comes down and touches it, bounces off again, bounces off again. Okay, you have violation right here. You have a crossover here, but is it enough to go over? No, you had resistance pushing it back up. So you look at it, and the farther you go away, you know it's going to eventually have to come back. So if you're going to use one, and I'm specifying one, use the 8 exponential. I don't even use that anymore. I'll still have it up on another chart or somewhere just to kind of just help me along to make sure that I've got my trend and my momentum running the same direction. But I don't use it to trade. I don't use it to trade. It's just there as confirmation. And again, looking across the multiple time frames, and like in the last video that I'll put right here, multiple time frames are very important, and we'll do another video. I mean, I'll go deeper into that, but the previous video I discussed that, and you can see it right there, and I'll have it down below linked as well. But candles are the way to go, and it has been explained to me, and I looked at this about 4 years ago, and I studied it, and I couldn't figure it out. And I suggest you trying to find a guy named Rob Smith. Find him on YouTube. He's a trader, been a trader since he was like 16, and he knows this, and that's all he uses: broadening patterns and candles, and he just picks them left and right. And I learned a lot from just by watching his YouTube videos. He's got a pay program, a group or something like that, but there's enough free. He gives enough free on YouTube. You can sit there and find these videos. But anyway, looking at let's look at like that bump right there. Okay? We see this here. We see that there was a downtrend. Well, how did we know that it was going to be a reversal? How do we know this was going to turn? You've got 2 deep runs here on 2 red candles. This candle right here is going to tell you what's going on. You've got, and how the candles work, if you're not aware, for example, it starts here at the base right here. Okay, that's the action, the trade starts right there, the price. So then it goes down, it bottoms out here, and it pushed all the way up, and it closed right here. It closed right there. So the next open dropped and went all the way up and closed here. Next candle starts here, goes up, tries to go up, but it gets pushed back down here and bounces. Next candle heads south, then heads north. What you need to notice here is you've got a shadow or a tail or whatever you want to call this. This is pressure pushing up. This is support pressure. He could not go down and break support here. So he bounced and went up. This is a good sign to see. You see it again here. Okay, you had 2 reds coming down, pushing down. You know this one got weak. It couldn't go past this point. Didn't have enough juice. So here comes the next candle. Down, bounce. Top here, finishes. Boom, boom, boom. This one up, down, up again, closed with inside. It's an inside candle, meaning it didn't go up here, it didn't violate the top, it didn't violate the bottom. Inside. So what's going to happen there? Indecision. So you're going to have a lateral move or possible continuation of your movement, of your trend, which that's what happened. So again, we saw that our entry was here if you were going by the moving averages, but your real entry should have been right here. Should have been right here. And you're at 478.73, and here you're getting in at 481.93. So $3 and change that you left out there on the table because you're waiting for these moving averages to cross. Candles, price action is where it's at. Price action is where it's at, and that's how you. It's a proven way to trade. I'm doing it now, and my gains are, my percentages are higher than they've ever been, just by looking at candles, formulations, price actions, momentum, seeing which way things are moving, and just paying attention again to candles, learning the different kind of candles. You like this one here. If you see this one here, that is an engulfing. It went up, it broke the top, it broke the bottom, finished on the bottom. So what's going to happen? You're going to have a downtrend. What do we have here? That same sort of candle again. We got resistance. Will not go down any farther than that. It pushes up, it repels, and it goes up. Same deal. So identifying candles and what they do, and the patterns that collectively they form, will allow you to see what's happening. Not in the moving averages, not in the lagging indicators that are telling you what happened before. This is telling you what's happening in live time. And that's, you want to get as close to the present as possible. You don't want to be lagging so far behind that you're going to be getting in late, getting out late, buying when you should have been selling. I mean, how many times does that happen? That's happened to me so many times. You just sit there, and when the lines cross or an indicator tells you to get in, and then you get in and you're like, well, what like here, it's wasn't that a continuation? Wasn't that a continuation of the previous trend? But the lines crossed, and the ADX told me, and the stochastics told me to get in, and the MACD told me to get in, and then it tanks. You know, and then by the second candle here, you're terrified, and then you jump out. You get out, or you could have rode at least here to minimize some loss, but still, you got in a bad trade because of a lagging indicator. And some are okay, and it's good to look at, but in past time, it's a past tense thing. You want to try to get as present as possible. And by identifying candles and price action, you will be as front of the game as possible.